Let me just finish my presentation. Wanted to go ahead and get the live started, so that way we can get some people in the door and we can start this conversation. This juicy conversation. Let's go to NFP. NFP and employment claims. Or unemployment rate. I'll take that one. No, we'll stick that one on. Alrighty. Now we can go ahead and get started. All right, what's going on, everybody? Real fast, let me stop sharing my screen because the first part of this is going to just be psychology. What is up, everybody? Hope everybody's doing an amazing job. Hope everybody's having an amazing week, doing an amazing job. Are you good? You guys catch the drift, right? Good vibes, love and light. In today's video breakdown, we are just going to be talking about mindset, the total cryptocurrency market cap as a whole, not particularly focusing our attention on any specific one project, just looking at the broader ecosystem as a whole. Zooming out, I just have some things that I want to get off to the followers of mine and the followers of CYPRX, just to kind of give you all some motivation looking forward, and maybe even drop a gem or two. As a matter of fact, that makes me think to pull up this PDF real quick. What you need, in my personal opinion, to be successful for this next bull market. And then we're going to jump into last week's macro breakdown, going over fundamentals. And then we're also going to cover this week, because we've seen massive whipsaws in the digital asset ecosystem over the past 2 weeks, over the past consecutive couple of months, but still just focusing our attention on the immediate macro. Why last week was bullish, why this week was more bearish, and just kind of showing you guys some charts and really breaking this information down for those who actually want to expand their knowledge and actually want to learn about the markets in which they're involved in, and not just have this hopium mindset that the digital assets that they're investing in are just going to go up in price for forever. Understanding, why there's sell pressure in the market, what's creating that sell pressure, what fundamentals are weighing on risk assets, things of that nature. So if you enjoy these video breakdowns, again, do us a favor, smash that thumbs up button, subscribe, just vibing, right? Love and light as always. Let me just find this PDF for you guys real quick, and then we'll get started, because I want to bring this up from within inside the CYPRX private community. There's just so much freaking research. Let me share. Let me, matter of fact, share my screen so you guys can even see what I'm looking at. So many articles, so many fundamentals, so many PDFs, educational documents teaching our community about these markets. See if I can find it. What you need before the next bull market cycle. I want to pull that up for you all. Preparation checklist for the next bull market. Boom, there it is. All right, we're going to go over this as well too, because this is important. Dang, so many tabs. All right, there we go. Jeez Louise, had to organize that real quick. It was all over the place. Sorry about that. Alrighty, so first, mindset. Okay, I'm not sharing my screen yet. We'll get into the screen share in just 1 second. We'll go over macro, but mindset. Okay, I was watching a panel discussion of some regulators and some financial organizations the other day, and some things that the gentlemen were capitalizing on was that people really need to zoom out and stop having this short-minded perspective. Really understanding that as human beings, we fall victim to overestimating the short term and underestimating the long term. Understanding that the current market conditions in which we're operating in now are temporary. It's a small hiccup again in the market that we're experiencing. For example, towards the end of 2023, beginning of 2024, everybody was extremely euphoric. Everybody was like, oh, the bull market's here, the Bitcoin ETFs, the halvening, it's all going to go to the upside forever, right? And now the market's in a slight downturn and people are getting a little bit fearful. People are getting a little bit skeptical. The attack on crypto is stronger than ever. And so I just wanted to be the one person on the internet in the form of the individuals that follow me and the information that I give to you all to say that this is just a hiccup. Understand why all this is happening through knowledge and education and understanding about the markets. And you can really truly zoom out and see that this is all temporary, right? The uptick in inflation that we've seen, the hawkish commentary from Federal Reserve speakers, the upbeat U.S. data, stronger dollar that we've recently seen, the geopolitical escalations and tensions in the Middle East, creating more of a demand for safe haven, all weighing on all these factors, macro, that are weighing on risk assets. That's all temporary, right? As retail investors in this digital asset ecosystem, this up and emerging asset class, we need to understand that behind the scenes, when you pull the curtains back, developments are still taking place. Blockchain organizations and crypto native companies are still developing. They're still hiring. They're still growing. They're still building out this new infrastructure. Okay. Regulators are still trying to regulate. Governments are still trying to implement digital transformation. Like the zoomed out perspective is to the upside. In the short term, give or take quarter by quarter, month over month, week over week, day over day, it might seem like there is a slight market downturn, and there is, right? But understanding why there is and understanding what is actually happening behind the scenes via the long-term perspective, another quarter down the road, another year down the road, 5 years down the road, you can really truly situate yourself on the right side of the market by investing in the right projects, doing the right research, and having the right mindset. So I just wanted to get that off my chest. This downturn that we're experiencing, right? Yesterday, cryptocurrency market was up. Today, the market's back down. Over the past 2 months, since pretty much the middle of March, going into April with the geopolitical tensions and the uptick in inflation, blah, 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 blah. Slight downturn from $2.7 trillion all the way back down to $2 trillion. So billions of dollars liquidated in the crypto market, like really understanding why and understanding that that's just a hiccup, right? In the next 5 to 10 years, we're going to zoom out. This market's going to look like a hockey stick, and everybody that didn't participate because of the immediate fear narrative that's implemented into the market week over week, month over month, quarter over quarter, short-term perspective, short-term mindset that gets fudded out, that gets witted out, that over leverages in the now, that gets too greedy when they're up and doesn't take any profit and reallocate positions and profits into the market by understanding order flow, you're going to get wrecked. You're going to get wrecked. You're not going to be able to survive. Your mindset is not strong enough. You're not in the right position. You're not in the right knowledgeable position to survive long-term. You might think you are because you downloaded an application on your phone, you dollar cost averaged in, right? And that's it. That's where you think the line stops. The line doesn't stop there. You have to further your education. You have to further your willingness to accelerate in this space because you are an investor that is going up against the smartest people in the world, the smartest people in the world. To survive in this market, it is not easy. You have to be able to stomach volatility. You have to be able to accidentally deposit $1,000 into this market at a high because you thought the market was going to go higher, not understanding the macro, seeing a pullback in your portfolio, and that $1,000 that you initially deposited going down to 700. You have to be able to stomach that. You have to know why your $1,000 is now worth is $700, so that way you don't get emotional and pull the money out and make an irrational, emotional-based decision. Again, you will get wrecked if you don't understand these things. And that's why here at CYPRX, we try to promote education. We try to pump out as much information as possible. People don't like it. People don't like honesty. Some people don't like education. They don't like reading documents. They don't like watching panel discussions, and they don't like the information that we provide because they want a lottery quick fix. They want to know when XRP is going to move, and they want to know what's the next meme coin that's going to pump. They don't want to understand the backdrop. They don't want to understand or put in the work, not only within themselves, but putting in the work to understand the markets in which they're operating in to actually accelerate. All right. So if you're a listener and you're not one of those people, and you're willing to learn, you're willing to educate yourself on the markets in which you operate in, which is a mature decision on your behalf. So bravo to you, right? And you're willing to really learn and grow as a person, as an individual in your investing career, then I'm speaking out to you. So again, shout out to those of you all who are tapped in, who are joining this call. And if you are one of those people that supports CYPRX, that supports the work that we do, that's really trying to formulate an idea and an understanding of these markets. So keep expanding your knowledge. I'll just say this, close off the psychology piece. Keep trying to grow and learn. We are in the age of information. We have artificial intelligence at our fingertips. We're literally cyborgs with our phones. We can Google anything. We can Perplexity AI anything. We can do amazing things with this technology. So take advantage of it. Keep expanding. Also take care of your body. Now is not the time to be lazy, to sit on the couch and be a couch potato and eat a freaking bag of chips and watch Netflix. Now's the time to go outside on a walk, to stretch, to practice breathing techniques, to go to the gym, to work out in your home garage, to get up on the floor and do push-ups when you're bored. Like, now is not the time to be stagnant. Everybody else in the world right now is stagnant. Everything else in the world is falling apart. When you see that, you need to be doing the opposite. That's why during COVID-19, I made over $250,000 in a year during the peak of the COVID-19 crisis, when everybody else was getting stimulus checks, right? And being sad and depressed because they were locked inside their house. What were the masses doing? Everybody was depressed. Everybody was distracted, right? Everybody was freaking stuck inside. The mentality they heard was sit back, chill out, do nothing, right? The government's got us. They're going to pay us money so we can pay our bills. And what do? We just wait. When the rest of the world is stagnant, when the rest of the world is chaotic, that's when it's time to be organized. That's when it's time to accelerate. That's when it's time to be physically fit and mentally stable, right? You have to learn how to play the opposite. You have to learn how to play chess, not checkers, long-term, not short-term. Because these governmental organizations, these people, these elites in control, they are always playing the long-term against you. And that's where we separate ourselves. The vast amount of sheeple out there, the people, right? They're so short-minded. They're so short-term. You have to start thinking long-term. Again, I'm spitting facts right now, y'all. All right. People don't like to hear this. This is not a truth that most people can stomach. Okay. You have to continue to build relationships. So 3 things I want my followers and the individuals listening to work on, right? Expanding your knowledge, increasing your capabilities, educating yourself on the possibilities that you have in the now to expand your wealth, to expand your health. I mean, it's nuts. To expand your third eye, to really awaken yourself. I would like for everybody to start to take care of their bodies more. If you're a listener of mine, you don't need to be a health nut. You don't need to go to the freaking gym. You don't need to be able to do 100 pull-ups, right? Not everybody is into fitness, but could you take better care of your body? Could you practice better? Let me rephrase that. Could you intake better sustenance? Absolutely. Could you stop eating junk food? Could you start to pay attention to what it is that you consume? You are what you consume? Absolutely. Could you practice breathing techniques? Absolutely. Could you possibly quit smoking cigarettes or drinking on the weekends every weekend? Absolutely. You don't need to. When I say take better care of yourself, most people think, oh, this dude wants me to go to the gym and get fit. No, just go outside and enjoy nature. Go on a walk. Do what your body is capable of. Stop holding it back from reaching its true potential, right? And then last but not least, building relationships. Now is not the time to be an introvert. I know that everybody wants to be an introvert, but that's what they want. They want us to not communicate. They want us to not talk to each other. They want us to not share ideas. Even if you're not the person, because you've been led to believe that you're not that type of person, an introvert, we are meant to network. We are meant to expand. We are meant to share love and light and grow. You ever seen that movie? I hate to make this comparison, but Planet of the Apes, the newest one. It's got like a series of almost 4 now, I believe. And Caesar in the video, one of the things that he says that it flies over the head of so many people, that message that movie brings. Because when I watch movies, if I do, which is very, very rarely, but when I do, I pay attention to the messages that Hollywood is attempting to implement into the minds of the masses that goes right over their head. And in that movie, Caesar breaks a stick and he says, apes alone are weak. And then he puts the stick that he broke together and he says, apes together strong, and he can't break the stick, right? They don't want us to connect. They don't want us to get strong together. They want us separated. They want us to tear each other apart. We are so fixated in the now on fighting each other instead of fighting those whom we need to be really fighting, right? If you catch my drift. Again, I got to curve my tongue because they don't like it when people think the way that I'm thinking right now. So anyways, macro mindsets out of the way. Just to break down real fast overview for any people that are listening now, we covered that the current market state and environment that we're in right now, understanding that it's a hiccup, understanding why it's a hiccup, why it's happening, why it's taking place, which we're going to go over in just a second, right? Truly understanding yourself, zooming out that developments are happening behind the scenes in the digital asset ecosystem, with or without you. Regulations are coming, regulations are growing. Governments are trying to implement blockchain and distributed ledger technology, artificial intelligence, data analytics, digital identities, all these things. It's happening, regardless if you want it to, or regardless if you're involved or not. It's coming. I mentioned that if the people that do get involved in the early stages, that do it right, which we're going to go over in this checklist that I have for you all, that prepare, that study, that focus on utility, that focus on the long term, that take the necessary steps now, you will survive. And those that don't, those that think that this is a lottery game, those that think that it's going to be easy, going up against the smartest algorithms in the minds in the world. Do you all hear what I'm saying right now? If I, a gentleman with no college background, nothing but military experience and a high school degree, entrepreneur for 7 years, talks like this, what do you think the superiors are talking like? That's who you're going up against. Okay. When you wake up and you see that, you will stop thinking that crypto is just about downloading an application on your phone, putting $1,000 in and hoping for the long term that you're going to survive and make it, because you're dead wrong. Something along the line of life is going to strike you. And if you don't prepare yourself mentally, physically, financially, and educate yourself on these markets, something will take you out. It's a freaking war out here. Y'all don't understand. Oh my gosh. It's been facts. All right. So real quick, before we get into the macro, let me share a screen. I wanted to go over this fundamental PDF because there are just some things to take into consideration that if you're not doing, again, it's not financial advice, but you should attempt to look into doing. All right. Before the next bull market cycle. These are just general overview things that people aren't even thinking about most likely. And if I say some of these things and you're like, dang, I already did that, then you're well prepared. So preparation checklist before the next bull market cycle. This is my personal checklist. This is not financial advice. Always seek advice from a financial professional and access your personal risk. Assess your personal risk. Dang, there's a typo in this. Didn't even realize that till now. There are steps that I think everybody should take. These are the steps that I've taken to prepare myself for the next bull market cycle. And in my opinion, the people that do not take some of these steps might fumble the ball on a massive opportunity to properly take profit, right? People aren't even thinking about that because they're so fixated on the now. If you're in America, if you're in Canada, if you're in any of these jurisdictions where regulations in crypto are moderately restrictive, you know what I'm saying? I've taken the necessary steps to open additional bank accounts, opening 2 to 3 extra checkings and savings accounts with banks near you, and inform them that in the near future, you are expecting large deposits within 1 to 3 years. Without mentioning crypto, just mentioning and talking with your banker and having a conversation, telling them, hey, look, this account might get a large deposit in the future of $1 million. So don't be shocked. So that way those notes are actually on your account, because the bankers can put notes on your account. So that way, when it happens in the future, the bank's not like, oh, this dude's definitely laundering money. Because I'm telling you right now, if you think that in your normal checkings account that you have right now at freaking Wells Fargo, and you randomly deposit because you become a crypto millionaire, $30 million into that account because you withdrew fiat, right? Your account will most likely get frozen. So have multiple bank accounts. Understand when that money comes, what you're going to do with it, right? Are you going to open up overseas accounts? Where are you going to put that so that the money doesn't stay dormant and it grows for you, it works for you, it creates passive income for you, right? And opening up additional bank accounts and understanding that money flow and what you're going to do with it. And how in the most people can't even fathom moving more than 6 figures because they've never had that money. It's difficult to move that money, especially if you're trying to convert it into fiat from crypto. Okay. So start to prepare yourself now. Start to do research on that. Now, I'm not saying that everybody's going to withdraw their crypto to fiat, but if you're planning on buying a house, if you're planning on using some of that money to pay off debt, if you're planning on using some of that money to buy a car or whatever the case may be, start thinking of how you're going to do that, what process you're going to need to go through. Okay. So that way, when it hits, when the time comes, you don't drop the ball. You don't become a victim to the market. All right. Diversify exchanges and brokers. Establish accounts with multiple exchanges and brokers for liquidity. If you don't have good access to liquidity, you will get wrecked when the institutions come in, and they're not going to tell you this. Centralized exchanges often have withdrawal limits or freezes on your withdrawals during high volatility. For example, Coinbase went down a couple months ago. Uphold's been down during high times of volatility. Yet these are the exchanges that the vast amount of people use. And I'm not saying that they couldn't upgrade their systems. They could. But if you're not KYC'd, when the next 500 million users comes into the space on multiple exchanges, 3 to 4, in my personal opinion, you will get wrecked. Because if one exchange shuts down, you can't on and off ramp, you're frozen out of the system. Who knows how long it's going to be until it comes back online. You don't want to be in that position. You want to have access to multiple different accounts. So go through that process now. Take your little KYC picture, talk to some different accounts, get on some customer service chats, ask your questions so that way you know that you're on the proper exchanges and whatnot that are looking for or looking to be regulatory compliant in the near future, right? Just don't go getting on MEXC because your favorite influencer promoted MEXC to you. Reach out to MEXC customer support and ask them, do you have access to institutional liquidity pools? Are you seeking to be regulatory compliant? You want yeses to all these answers. Most people don't even freaking ask these questions, don't even know that you can go chat support these exchanges and ask these questions, right? Telling y'all, people are sleeping, man. Okay. You want access to an OTC broker. You want access to a broker that provides access to institutional liquidity. That means they can dip from multiple liquidity pools and their exchange or their OTC broker doesn't shut down because they don't have a lack of liquidity. MEXC, I've talked to their customer support. I broadcasted this. They do not have access to institutional liquidity pools. Uphold, why do you think there's withdrawal limits? Why do you think Coinbase there's withdrawal limits? Okay. If you become a 50 millionaire off crypto, you think you're going to withdraw all that money from Uphold? No. It's going to take you a year to do that on Uphold because there's daily withdrawal limits. There's weekly withdrawal limits, right? Reverting back to number one, and if your bank account doesn't understand that you're about to deposit that vast amount of money into your bank account, it will get frozen, most likely. And you don't want that to happen. You don't want friction. We're operating in a new frictionless environment. So you have to work with the changing times by updating your education, by not being stagnant. I mentioned OTC broker that has access to multiple liquidity pools and the ability to withdraw massive amounts of capital. For me personally, I use Caleb and Brown. There's probably other options out there. I'm not going to sit here and promote Caleb and Brown to you guys. Go reach out to them, do research on the opportunity that you have to withdraw crypto in this market and on-ramp it and off-ramp it in the form of fiat to crypto, crypto to fiat through Caleb and Brown, right? When you're frozen out on Coinbase, when you're frozen out on Uphold, you have a Caleb and Brown account, you can still operate in the space seamlessly and efficiently. Practice efficient crypto transactions. You should have the ability within a couple of minutes span to send money from your cold storage to your broker, to your broker, to your bank account, from your bank account to your broker, from your broker to your cold storage. If you can't do that quick, you're wrong. You should be practicing this with test transactions so you get the habit down. So you know what you're doing. So that way, when the time comes and your adrenaline's pumping because you just made $1 million, which most people in their life haven't even experienced that adrenaline pump. Trust me, I have. It's crazy. You get at your computer, you're fucking shaking like this. All right. Train your brain to know what you're doing in the form of crypto transactions. Get efficient at it. Learn how to bridge. Learn how to send crypto from a centralized exchange to a hot wallet, from a hot wallet to a DEX, from a DEX back to a hot wallet, from a hot wallet back to a centralized exchange, from a centralized exchange to your bank account. Understand that whole entire process. All right. Secure your cold storage. If you've invested in safe or cold storage units, make sure that they are in a Faraday bag to protect against an EMP or hacking attack. Not financial advice. Again, it's just something that I do. I have all of my cold storage devices in a Faraday bag in a safe place in your house, right? Have a separate cell phone. This is the last thing. All right. Have a separate cell phone that is disconnected from cell phone service, right? That only can connect to the internet. I mean, I think that to some degree, it has to be connected to a service. Like you're going to have to go into a Verizon store, or T-Mobile store, or whatever to buy the phone, right? But it's not your daily user. It's not the phone that you text your mom on every single morning or whatever. Hopefully you talk to your mom in the morning, right? Okay. Have a separate cell phone. Have an Android and an iPhone, because sometimes, right, if you have an iPhone, we know that they're a centralized organization, Apple, right? And they like to monetize things. They like to shut things off. So have other options. Have an Android, have an iPhone, have two phones. One that you use via your daily user and the other one that you use specifically for crypto that you put in your Faraday bag, right? Don't have all your wallets for your cold storage and your hot wallets all on the phone that you use to answer business calls and answer spam calls and answer emails, right? Because again, the object of the game is to mitigate risk. The object of the game is to survive long term. The object of the game is the preservation of capital. And if you're not taking the necessary steps to preserve your future capital by going over these things that I've mentioned now in today's video breakdown, starting with understanding the macro, understanding the mindset that it's going to take, understanding the educational process, and then doing these things to protect yourself and protect your wealth and your future experience that you could possibly have in this market, you're not going to survive. And that's just the fact. All right. So anyways, I thought that I'd share that with you all. I typed that document out for the private community, one of the many documents that we have here in the educational section. So that's out of the way. As we talk, I get a spam call on my phone, right? Nutso. People have the same wallets that they get spam calls on their phone with, on their phone downloaded. All right, macro. Let's go over this real fast. Let's understand market conditions and really just take a look at the market, zooming out. I know that there's a lot of stuff on my charts right now. Just, it'll all pan out once I break this down for you guys. But let's just understand looking at the past 2 weeks, right? We know I already went on this tangent, zooming out, going all the way back to March on a higher time frame. We know that the downturn in March started to happen and unfold, as in the middle of March, we started to see an uptick in inflationary figures. Then as we progressed through March and we headed into April, we saw continuations in strength, fundamental data from the United States and the dollar. And then we saw a further uptick and increase in inflationary figures. And then towards the middle of April here in this area, we saw the geopolitical escalations and tensions in the Middle East take place with Iran and Israel. And that created a further risk-off sentiment and more demand for safe haven, right? And so that's now led us to where we're at today, roughly hovering around 2.3 to 2.1, trillion dollars total cryptocurrency market cap, putting us all the way back around February and March intermediary lows. All right. So let's just look at the past 2 weeks. Last week, very interesting price action because the market got a little bit euphoric. We saw a nice bounce in the total cryptocurrency market cap. Again, not focused on any particular one project, just looking at the space as a whole, right? We did see a nice recovery from roughly around $2 trillion back up to almost $2.4 trillion. And everybody got a little bit euphoric without understanding why this was. Well, this was primarily driven by the FOMC meeting in the middle of the week on Wednesday. where Federal Reserve Chair Jerome Powell's comments after the 2 day of policy meetings were not as hawkish as many feared, right? So he did mention that inflation is still sticky and troublesome. He did mention that the fight on inflation is not over. And he did mention that the Fed, as of right now, is in no position to cut rates in the near term. But the market still held on to the rate cut narrative because Jerome Powell reiterated to the market that they're not going to or not thinking about hiking rates as of right now. And that rate cuts could still be on the table as long as they see lower inflation and they see, possibly even considering rate cuts, weakness in the labor market. You can see that right here. Jerome Powell said, yet it also stands ready to cut rates, or the Fed stands ready to cut rates were the economy to materially weaken, and the unemployment rate were to rise. Right? So the market, seeing that information, held on, gripped on to the rate cut bets, the rate cut narrative. Why though? Why did the market last week hold on to rate cut bets? Because we saw US jobs data on Friday come out weaker than expected, right? And on Wednesday, what did Jerome Powell say? He said that if they see weakness in the labor market, that could potentially be a catalyst that would lead to the Federal Reserve cutting rates, right? So the market gripped onto that narrative when we saw a risk on market appetite, investors more inclined to take on risk in a market recovery. And you can see that in this fundamental here. This is from Friday. US dollar dropped sharply as US jobs report misses every metric. The NFP data missed the mark. The unemployment rates came out slightly higher than previous readings. Previous readings at 3.8%. They came out at 3.9%, which shows slight weakness in the labor market. And if the day prior to that, on Wednesday, Jerome Powell mentioned that the Federal Reserve is still likely to cut rates if they see weakness in the labor market, that's why the market held on and gripped onto that narrative, and we saw a bullish recovery, right? So that was last week. This week, completely different perspective. The market this week was more risk averse, more risk off, more strength in the dollar, less strength in crypto assets. As you can see this week, just clearing out all the drawings real fast, this was the start of the week this week, and this is how we're now ending the week. This is Monday, this is Friday. So why did this decline in price action happen? It wasn't just because. It wasn't for no reason. Fundamental factors weighing on risk assets took place throughout the entirety of the week. And it's important for you to understand this because this entire week, seeing these fundamentals unfold, what did we do here at CYPRX? If you look at what the retail herd was doing, it is so freaking obvious. People, please listen to what I'm saying to you all right now. Look at SHX as an example this week. SHX rallied from April 16th all the way up until yesterday, over 99%. But you can imagine how many people were buying SHX yesterday because they FOMO'd in and they were afraid to miss some massive opportunity, right? Without understanding the macro. SHX today has slightly pulled back, right? We here in the CYPRX community were buying SHX all the way back in April when the market was pulled back at roughly around the 0.005 psychological level, right? So the retail herd yesterday was buying price when in reality, look at the market. Look at the total cryptocurrency market. The market makers were dumping on you, right? The market makers were dumping on you. The total cryptocurrency market declined yesterday from this week, declined from $2.3 trillion this week down to 2.18. That is a decline. That is them, the elites, i.e. people with more money than you and I that actually control the price movements in this market, selling their positions. Why did they do that? They reallocated their capital into the dollar. If you go look at the dollar increased throughout the entirety of the week, right? You can go check this out yourselves. We go look at the dollar real quick. Right? Dollar overall at the start of the week, here's Monday, saw a significant increase in value. Midweek, we saw some downbeat labor market data, which we'll cover. And then today, the market ended with a slight uptick because of some things that happened fundamentally in the market, right? And that's why today we saw that drop in price and the total cryptocurrency market cap. So let's go over this. Let's talk about this week. So why did this week start off with a more risk adverse, risk off market tone and strengthen the dollar? This was primarily driven by hawkish Fed commentary. hawkish Fed commentary pushes rate cut hopes back even farther, right? Or dwindles out the narrative that the Federal Reserve could potentially cut rates. If Fed speakers are confident that they're not going to cut rates and that rates are going to need to remain higher for longer and that the job on inflation, on fighting inflation is not done, that weighs on rate cut bets. We can see here, one of the Fed speakers that took place, there were multiple that happened this week. Fed's Barkin said, inflation data this year is disappointing. Job is not yet done. That signals to the market that rates are going to need to remain higher for longer for the time being. That weighs on risk assets. So Monday, rolling into Tuesday, we saw that weighing on price. Market declined. Outflows of risk assets, right? Then heading into, I believe it was either Tuesday or Wednesday. I believe it was Tuesday, if I'm not mistaken. We had another Fed speaker, Neil Kashkari, right? His name's so weird to me, Kashkari. Where the dollar climbed again on Tuesday. Yes, this was Tuesday, May 7th, on hawkish Fed comments. So Monday, we saw hawkish Fed comments weighing on rate cut bets. Tuesday, we saw hawkish comments weighing on rate cut bets. Here you can see the dollar index this morning was up 0.06% on hawkish comments from Minneapolis Fed President Kashkari supporting the dollar when he said he questions if the Fed policy is restrictive enough given recent inflation data, right? So again, what does that do? That weighs on rate cut bets. So I wrote down here for you guys, the Fed's Kashkari comments have dampened hopes for potential interest rate cuts this year, lifting the greenback, i.e. the dollar. The uncertainty surrounding a ceasefire talk also between Israel and Hamas is still lingering fear in the markets, which supports safe haven appeal. So we also had that this week. You guys can go check those fundamentals out just by Googling it. So what did we see? Midweek Tuesday, more inflows into the dollar, further outflows of risk assets, i.e. crypto market cap as a whole. I'm not sitting here talking about XRP, Bitcoin, none of that. The whole entire market as a whole, billions of dollars gone, wiped, sells. Why though, right? You got to understand why. Because investors, hedge funds, large family offices, asset managers with more money than you and I sought that the market tone was risk off. They implemented their capital into dollars this week. Less capital, profit taking from crypto. And then on Thursday, random market turnaround. But why was that? Where we saw the total cryptocurrency market recover slightly on Thursday from roughly around $2.1 trillion up to about 2.2 to 2.3 trillion. And this was primarily driven to Fed rate cut bets randomly coming back on the table due to weakness in the labor market data, where we saw unemployment claims in the week ending in May. The advanced figure for seasonally adjusted initial claims was elevated at 231,000, which was an increase of 22,000 jobs, an increase of 22,000 people filing for unemployment from the previous week, right? And if you guys remember what I mentioned to you all, the Fed said last week at their FOMC meeting that they would possibly consider cutting rates if they saw weakness in the unemployment rates in the labor market, right? So what did the market do? You guys see this? You guys see the inflow? The market held on to rate cut bets, and we saw on Thursday a risk on market move, which is why the total cryptocurrency market cap increased in value. So I said here to you guys in a note. So let's understand this, right? The increase in initial jobless claims on Thursday signals potential weakness in the job market, raising concerns about economic growth. This could lead investors to sell their dollars due to expectations of slower economic recovery. Additionally, it supports bets for Federal Reserve rate cuts, as the central bank may consider further stimulus to support employment and economic activity, right? And so we saw inflow back into the market. So all week, Monday, Tuesday, Wednesday, we saw outflow of risk assets. This was primarily driven by hawkish commentary from Federal Reserve speakers weighing on rate cut bets. Thursday, boom. Labor market data comes out downbeat, higher unemployment claims, which strengthens risk assets, weakens the dollar usually. Why? Because the market with this downbeat labor market data starts to grip and hold on to the rate cut bets, which we know has been a primary factor driving risk assets, especially considering the fact that last week we saw the bullish uptick in price, which was primarily driven by rate cut bets. You guys catch my drift? Right? And so now today, ending the week, heading into Friday, why is the market down? Why did the market completely drop in one candlestick on the higher time frame, i.e. the 4-hour, from 2.3 trillion almost down back to 2.1 trillion? And I'm just rounding off figures here. Completely correcting the entire bounce that we had on Thursday. There is a reason for this. It's not just random. So today, we got more hawkish comments from Federal Reserve speakers. Hawkish comments from Fed speakers, and we also had higher inflation expectations, where the inflation expectations rose from 3.2% previous readings up to 3.5%. That weighs on risk assets and brings temporary strength to the dollar. Now, the hawkish comments suggest no rate cuts this year, which attract investors to the dollar for higher yields compared to other currencies like risk assets. We had Fed Bowman confirming that interest rates need to stay higher for longer in her speech today, which further supported the strength of the dollar. We also had Fed Logan today say it's too early to think about cutting rates. All of that combined with the increase in short-term inflation expectations suggests that higher rates for longer by the Federal Reserve is necessary to curb inflation. This makes holding dollars more attractive to these larger investors than you and I, these asset managers, these hedge funds, these family offices, and brings concerns about the job market, indicating economic uncertainty, which prompts investors to move away from riskier assets, right? And so we saw the sell-off happen. So understanding all these factors in the short term is good for you, because if you knew that we were in a risk-off market mood, you wouldn't have been chasing price action this week. You could have sat patiently on your hands, waited for further discounted price, and dollar cost average in properly instead of impulsively chasing the market, right? Understanding, though, zooming out, higher time frame, weekly, monthly, quarterly, yearly, this is all just a hiccup. This is all just temporary, right? This is all to distract people from seeing the future potential of the space, which in the future, 5 to 10 years from now, this market cap will look like a freaking hockey stick on the higher time frame. Okay? So I hope that you all enjoyed this video breakdown. If you have been here since the time that I started this call and you've made it this far, really do appreciate the love and the support. Last thing I want to say before I hop off here is what we need to be paying attention to next week. Market is in a very interesting point. Okay? What do I mean by that? Well, next week, we have important inflation data, right? So next week, in my personal opinion, will be a make or break moment for the digital asset space, because we saw higher inflation in March, which led us to this market downturn. This was March, roughly about Wednesday to the 14th, Thursday in March. We saw higher inflation in April, rolling into March. We saw upbeat US data, strengthening the dollar and weighing further on risk assets. And then here in this area, we saw the geopolitical tensions and escalations in the Middle East weigh further on risk assets, right? Then we had an anticipation for a hawkish Federal Reserve at their FOMC meeting, which further weighed on risk assets. And then at their actual FOMC meeting, they came out with a more dovish perspective, allowing the market to hold on to the rate cut narrative, which created this bullish market turnaround, right? So now the question is, next week, are we going to see higher inflation? The market pushing back rate cut hopes even further, the Fed possibly taking action, maybe signaling to the market that they could potentially hike interest rates again, which I don't think is going to happen. But if inflation comes out extremely elevated, that'll then be the third month in a row this year that inflation came out higher than previous. Coming out higher in March, coming out higher in April, and then in May, that would be 3 consecutive months back to back to back. I wouldn't be surprised if some Fed speakers, the more hawkish Fed speakers like Kashkari and Fed Bowman and Bolstick even, who mentioned, hey, Federal Reserve could possibly take hiking measures again if inflation spirals out of control or can't come down to the Fed's mandate of 2%. I don't think that that's going to happen. I think that the Fed would just keep rates higher for longer, but I'm just saying, Understanding what that would do if that sentiment started to get pumped into the market, we would see a pullback further in crypto. There's nothing you can do about it. Doesn't matter how many positive developments happen. Doesn't matter how many positive network connections and partnerships Ripple make behind the scene. XRP ain't going to pump. XRP is going to drop with the rest of the market because we're in a trading environment right now. The banks are not using these assets for their utility yet. And they're not going to until regulations firmly are implemented into this space. So with that being said, temporarily, if next week we see elevated inflation, stronger dollar, guess what's going to happen with all your crypto? It's going to drop, right? It's most likely going to drop. In my personal opinion, next week, if we saw higher inflation and stronger dollar and upbeat US data throughout the entirety of the week, that would be a catalyst for us to continue this downtrend, where I could see us coming all the way back into maybe potentially 1.9 to 1.8 trillion dollars, coming back and revisiting this previous demand range in the total cryptocurrency market cap, right? Furthering this downwards movement. If we saw an uptick in inflation, stronger dollar, right? Upbeat data, more hawkish comments next week, even potentially further geopolitical escalations, those would all be catalysts that would drive more safe haven demand and less risk asset demand. Now, inversely, right? Because we want to play the more favorable scenario, the thing that I hope is going to happen is we see a complete reversal of risk off sentiment. And we see lower inflationary figures. We see weaker dollar. We see downbeat US data. And we see a turnaround in the digital asset space, holding this current demand range in which we're operating in now, which is roughly around $2.1 to $2.3 trillion. We see a more favorable risk-on environment, weakness in the dollar, and strength in risk assets, and we break out of this, let's just say, give or take, bi-weekly consolidation that we're currently in, where you can see right now the market's kind of just moving sideways. It's making a decision whether it wants to break higher or break lower, and we're going to need data for this. We're going to need sentiment for this, and next week is extremely important. So be paying attention to the CPI and PPI figures that are coming out next week. Very important inflationary figures on the US front. We'll be covering them here at CYPRX. We'll give you guys updates. You guys have my future projections. You guys have my most hopeful projection, right? Lower inflation readings, strength in risk assets, weakness in the dollar. I hope that this is what we see, a bullish recovery and the recent pullback. But if we don't, I want my followers to be prepared. It's nothing to be fearful of. It's more so something to look at in the form of an opportunity, whereas you get to buy more of these utility-driven assets at a further discounted price. Understanding the macro, the higher time frame, the zoomed out perspective that this digital asset will be in the multi-trillions of dollars in the future. Most people on the internet will be fearful. More people will call crypto a scam. More people will say, oh my gosh, $500 billion more dollars is going to get liquidated. Get out of crypto. Wow, sell everything. No, just understand that it's a pullback. It's a profit taking. It's not unusual to see a correction, especially considering the fact that the previous bullish move, if we go to the even higher time frame, was massive. There was no real correction in this previous bullish move. So it's not illogical to see a pullback to these previous demand ranges, i.e. here and here. It's not illogical to see that. There's going to need to be catalysts that create that momentum to the downside. And higher inflation next week could be one of those catalysts that sends the cryptocurrency market lower to previous demand ranges for then to us consolidate, accumulate more buy orders, and flip price back to the upside, long-term, macro, right? So just understand that moving forward next week. Understand some of the things that I talked about, the mindset, the hiccups, the preparation. And other than that, I think that's all I got for you guys today. What a session, right? Hopefully you guys took some gems away. If you did, blessings to you all. Don't forget, we're going to be releasing a DeFi University here shortly within the next couple of weeks. Me and the team are working hard behind the scenes to curate this for you guys, to put all this together for you all, to deliver you all some valuable information in the DeFi space, how you can get involved, how we're growing personal portfolios in the DeFi section, making that all transparent for the private community, showing them how I'm growing $10,000 and $50,000, which is well above the target profit mark so far. Yeah, blessings to you guys. Tune in. If you guys have any questions, DM me. If not, message us send a message to the customer support email. Follow us on X, follow us on YouTube, and I'll see you guys in the next video breakdown.